recent listings on the bourses was Aeroflex. Of course, the issue price was around 106 thereabouts. It's right now trading at around 152. So we have seen a good amount of increase as far as those is concerned. Just to kind of revisit for our viewers, the company is a manufacturer and supplier of flexible flow solution products, which basically means the stainless steel, corrugated, flexible hoses, etc. And the industries that they cater to include the likes of steel, oil and gas, fire sprinklers, refineries, aerospace, etc. Mr. Asad Daud, the MD at Aeroflex Industries, is joining us on the show. Hi, thanks so much for making time and speaking with us. First up, you recently announced some capex and expansion plans as well. Talk to us about what's the size, what will take your capacity up to, when does it come on stream, and how are you going to fund this?
Thank you so much for inviting me, to your show. So yes, we are planning to increase our capacity from 11 million meters per annum to 13.5 million meters per annum. We have already started to work on that, and we are doing this through a couple of processes. One is through modernization of our existing machines. We are revamping our existing machines, and also we're looking to buy new machines which will help us increase our capacity. We have also purchased the land which is right next to our factory. That will also help us in this increase in our capacity. And we are expecting a total outlay of about 48 crore rupees for funding this entire expansion. And since now we are a debt-free company, we'll be actually doing the expansion through all our internal approvals.
We've also seen the trajectory of your margins improve in the last 3-4 years to almost 20% plus. With this capacity, additional capacity, capex, etc., in the next 2-3 years, what's the scope of margin expansion?
So yes, we have increased our margins over the past 2 to 3 years, and we will aim to increase our margins, in the near future as well. Obviously, with the increase in capacity, we will be getting benefits of economies of scale. Plus, also we are going into more value-added and higher margin products in terms of more assemblies and components, which will also have a positive impact on our margins.
See margins sustain in 3 years, 30%, 25%?
So, currently in the first quarter, the results which we have announced in this week, so our margins has increased by 1%, our EBITDA margins, and we aim that over the next 2 to 3 years, we expect our EBITDA margins to grow in the same percentage as what it has grown over the past 3 years.
The margin expansion story is likely to continue, but let's also talk about the top line. Talk to us about how the client conversations are turning out to be. What kind of order inquiries are you getting, and what kind of revenue growth do you envisage for the next 3 to 5 years?
So in terms of inquiries, so we're getting a strong inquiry flow both from the export and from the domestic market. And so actually the domestic market has proven to be more beneficial, especially over the last 2 months. We are seeing a really strong growth from the domestic sector as well. And in terms of the growth percentage, so over the past 3 years, we have grown at about 35% CAGR, and we expect to grow at the same rate over the long-term period as well.
Asad, you are a B2B company, right? Can you give us a flavor of what industries are you feeding your products into? One, and also in a B2B kind of a setup, unless you are very good in technology, it is difficult to command such margins because bigger players, bigger buyers don't let you. I mean, the conversation head into no business zone if you leave a lot of unless you leave it on the table. So, which industries are you catering to? And is technology a moat by which you are commanding such good margins or something else?
So in terms of, I'll answer your second question first. In terms of the margin, so it is a mixture of a lot of combination. One is we have a strong team of R&D who comes up with new innovative products which can solve the problem that are being faced by our customers. Second, in terms of the quality of our products, it is equivalent, if not better than the standards of European and our US competitors. Plus also in terms of the certifications that is required for us to sell our products. So the certifications, and a lot of these certifications take up to 1 to 2 years to get. So all of these results in us having better margins. And obviously, since we are manufacturing in India, we are able to develop high quality products at a reasonably low cost. That also helps us in our margins. Now, in terms of the industries that we are catering to, we cater to the traditional industries like steel, petrochemical, oil and gas, your chemical industries, food and pharma industries, mining and metal industries, and the new age industries where we are slowly now increasing our focus, which includes solar, fire sprinklers, EV mobility, and the aerospace industry also, which we are trying to enter into now. So we are having a nice combination of both the traditional industries, and now we're slowly going into these new age industries.
Okay, and just before I let you go, a couple of questions. A, earlier you had talked about that from 30 crore profit right now, you're likely to hit 100 crores in FY25. Are you sticking to that? And secondly, you had also taken, while IPO, you had talked about some inorganic acquisitions in the pipeline. Anything which is likely to be announced soon?
So in terms of our profitability, we aim to, to increase our profit, month on month and quarter on quarter. Specifically, I will not be able to give a specific answer to a number, but we are aiming internally and we're planning to increase our both top line and our bottom line in terms of both numbers and also in terms of the percentages. And with regards to the inorganic acquisitions, so we are looking for inorganic acquisitions both in India and abroad. They are at a extremely early stage right now, so I will not be able to comment much on that. But hopefully, in the future, you will be able to see that we are looking for some acquisitions.
Okay, and we'll wait by to have a conversation with you again as and when you do make those acquisitions. Thanks so much for making time and speaking with ET Now. So that's the word coming in from the management
So much.
of Aeroflex Industries. But time now to